Hello, everybody, and welcome to episode number 6 of the Traders Podcast. I am your host, Jeremy Hritz. Very excited that you're joining me here for episode number 6. We are rolling along in 2024, and just want to point out that this show is part of the Courage Pays Better Than Fear brand, the other podcast that I do with my good friend Edmund Fontana. And as you all know, I am a trader of the markets. I get to live my dream every day, and I get to share it with all of you. And that's why I put this podcast together. So very excited to be here with you today for episode number 6. And I got a great agenda to go over with all of you here today in terms of what we're going to talk about. So I always want to give a little tidbit or a tip for people who are beginning or just starting to trade or invest, something that they can take and apply in their growth as a trader and investor that you can use right away. And so today we're going to talk about moving averages and how you can use a simple moving average or an exponential moving average to interpret the price of a stock and to know where to buy and sell it. So we're going to get into that. I'm also going to talk about the importance of patience in trading and investing, and in day trading and in swing trading. So very excited to talk to you all about that, why it's important. And then we're going to look at 2 stocks in particular, super microcomputers, which I've talked about on a previous episode. And we're also going to talk about NVIDIA because they have been just so strong recently. And it's almost historic as to what these companies are doing. And it's a battle back and forth between these two for dominance to see whose price can go higher. So we'll take a look at their charts. Excited to share that with all of you. But I do want to point out that starting February 26th, I do have a profitable swing trading class that I'll be teaching. And I had a lot of traders or aspiring traders reach out to me and say, I see a lot of classes about day trading, but I haven't seen anything about swing trading. Swing trading being any type of trade that lasts longer than a day. And this is a style of trading that is more conducive for people who are working full time. So over the 6 sessions as part of this course that, again, will start February 26th, I'm going to walk you through all the steps to begin swing trading with your own money so that you can begin generating profits and income and building your wealth. So check out my Facebook page. I'll also put a link for the registration in the show notes. But if this is something that you want to learn, sign up. Very excited to do that. These are all live classes. They're recorded. They're sent to you following the session. So would love for you to be a part of that. Be sure to register right away. Okay, so let's start this show with a little tip to help you know how to trade. And what we're going to talk about are moving averages. Okay. And what I'm going to do is pull up a chart here to show you what I'm talking about. And give me 1 second to do this. You guys know that I love charts here. And this is TradingView. Hopefully, if you're watching the podcast, that you have downloaded TradingView by now. But you can see here, this is just a plain, clean chart. There's nothing on it. But what we're going to do is add what's known as a moving average to our chart. And basically what a moving average is, if we're talking about a simple moving average, it's the average price over a specified number of days. So if it's a 20 simple moving average, or SMA for short, it's the average price over 20 days. If it's 50, it's 50 days. If it's 100, it's 100 days, right? And then there's also what's known as the exponential moving average, which just gives greater weight to the most recent price of the stock, all right? But what we're going to look at here today is the simple moving average. So in order to add a simple moving average to your chart on TradingView, you're going to want to click this button that says indicators. And then what you're going to do, you're just going to type in moving average. And what will be populated on your screen is moving average simple. You're just going to go ahead and click on that. And what's going to happen is it's going to add a line on your chart. You can see it right here, this blue one, and that is a moving average. Now, we can make it any number of days that we'd like to. So right now, it's a 9-day simple moving average. So let's just pick a number. Let's go with 100, all right? So when we click this gear setting, it takes us to where we can change the number of days. So we're going to change this 9 to 100. And then I also like to make the lines thicker so you could see them very clearly on your screen. Then you hit OK. And now we have a 100-day simple moving average on our chart. Now, you might be saying, well, what's the purpose of this? Why would I want to have a moving average on a chart? What am I looking at here? Well, one of the things that you can do in order to become an effective investor and trader is study how the stock that you're trading typically interacts with that moving average. All right. And we can see here that on a daily chart, specifically with Tesla, that this 100 simple moving average, when we're above it, we are bullish. And at times, we see that the stock can bounce off of it. Like what happened here back in December of 2021, you see that it bounces and goes higher. And we could see that when we break below that 100, that we enter a bearish trend, right? We break above it, we become bullish. We break below it, we're bearish. But it's also going to show you too that at times these moving averages that you're looking at, they act as supports or bouncing areas like what happened over here. So you could see if we fast forward to August of 2022, Tesla pulled back and bounced right off of that 100 simple moving average. And then it went higher, and then it pulled back and bounced right off of that simple moving average. And then it dropped below and entered into a bearish trend. So ultimately, what these moving averages empower you to do is interpret the different price levels of the stock. And when they get into these areas, you can make educated, informed decisions about what possibly could happen next. Now, no strategy in trading or investing is 100% effective. It's not going to work all the time, but for whatever those stocks are that you want to trade, I strongly encourage you, put a moving average on your chart. It doesn't matter if it's a 100-day. You can create any type of moving average you want. So check this out. We can go in here and change this 100 to, let's do a 75-day moving average. And boom, there we go. And if you study it enough and how your stock interacts with it, you can use it to help inform you about how to trade that particular stock. Okay. And so if you see that the 100-day simple moving average or the 75-day or whatever you come up with, the 13-day, that when your stock comes into that and it typically bounces, then you have enough information to use, if you've studied it enough and came up with a plan, to buy at those levels, let it run higher, sell, and generate profits. So there you go. Simple moving average, a tip that you can apply right away. I showed you how to add that to your chart. And let me know in the comments how it went, or if you have questions, I'd be happy to help you with that. All right. So today's topic, we're going to talk about patience in trading. And how do we know when we're being impatient with a trade? Or how do we know when we're being overly patient, where we should have bailed on the trade a long time ago? So I wanted to talk about that. And it's a little different for every type of trade. Patience in swing trading is different from patience in your long-term investment versus patience in day trading, right? And so when you think about a day trade, you're entering a position with a plan. You have your entry price, your stop loss where you're protecting yourself, and your profit taker. And so a lot of times what will happen is traders will get impatient if the trade doesn't begin working for them immediately. And let's say that it reverses and starts moving down close to their stop loss area. A lot of traders will panic and won't be patient and will exit the trade for a loss, and they'll deviate from the plan. And a lot of times what will happen when we're impatient and we jump out too quickly, the stock will bounce and go higher and run to target. And what has to happen is we have to overcome that fear of when we see stocks pull back whenever we have a trade set up, and understand that it's not something to be afraid of. It's a normal action of a stock to pull back. It happens. You're rarely going to have trades that just run directly to target. Now, it does happen at times, and those are a lot of fun because you make money very quickly. But the path is typically not linear. You're going to move up, you're going to pull back, you're going to move up, you're going to go sideways, you might pull back before going and hitting target. So whatever your plan is when getting into that day trade, stick with the plan. And if you have overwhelming evidence that says, yeah, this is not going to work, then that's where you can protect yourself. Move your stop loss. They call it a trailing stop, but give it a chance. Don't just give up on it. Now, with swing trading, that's a little bit different because you have all the time in the world. Remember, a swing trade is anything that lasts longer than a day. It could be a few weeks, it could be a month, right? And you have the liberty of time to be able to look at it over the course of a few days and weeks and make decisions about, should I take my profit now off the table and look for a new opportunity? Should I cash out a partial and protect myself by moving my stop loss into the money? But the beautiful thing with swing trading is, again, you have time. You don't have to rush those decisions because every day when you're looking at what the trend is and what the candles are telling you, you can make informed decisions. So patience in swing trading is going to be a lot longer term than it is in day trading, where you're acting within 30 minutes to an hour and a half, 2 hours. Swing trading is going to be a lot longer than that. And then when we talk about long-term investments, that's where we are committed to the long haul, right? We're letting this thing take its time to grind higher up to a resistance area where we know we should take profit. A resistance area being where the stock typically hits and pulls back. And there's a better way to invest instead of just buying and holding. It's active investing where you know where to buy, you know where to sell, and you just repeat that process and compound your profits. But really, what patience all comes down to for any trader who's effective, who's profitable, it's having a plan before you get in your day trade, your swing trade, your active investment, and following that plan. And that's really how this works. That's what patience is. You have a plan for a reason. There's a purpose behind it. It's to maximize your profit. Once you enact that plan, monitor it, let it come to fruition, let it develop. Don't give up on a trade after 3 minutes, 5 minutes, 10 minutes, a day trade. Don't give up on a swing trade after 5 days if it hasn't run to target or if you're down a little bit. And definitely don't give up on an active investment after just a few weeks of being in that position. In the markets, what you will typically see is as stocks pull down, you'll hear people saying, oh, the sky is falling, this stock is going to zero. But a great example of this was Netflix from this past fall, where it sold off very, very rapidly from the 480 level down to, I believe, around 350, 340. And everybody kept saying, Netflix is done. It's over. It's all about the YouTube generation. This company's done. But then what happened? Just when the peak of the negative news cycle around Netflix just became intense, it gapped up over earnings, and now it's trading up around $560 to $570, and it's working its way back up to the all-time high that it had in the past of $700. So it's important in trading, and this is part of that patience component, to zoom out, take a longer-term perspective, and know that stocks pull back. Don't panic, but they always return to the mean. They'll always come back up. Now, if you're trading trash stocks, penny stocks, yeah, they're going to go to zero. You shouldn't trade garbage, right? And if you're doing that, then you're going to lose money straight up. But if you're trading high quality stocks, good business fundamentals, profitable companies, good leadership, then you should be in a position where you will get a return on your investment. Okay? So have that patience. That is a requirement as a trader. Have your plan, stick to your plan, give yourself a chance for that plan to work out, and just see what happens. I guarantee you it will turn out in a positive way for you. Okay? Now, the last thing that I wanted to talk about today was looking at two of my favorite stocks that have just been driving the market like crazy, and they are NVIDIA and super microcomputer. So I'm sure most of you have heard of artificial intelligence. And when we talk about NVIDIA, when we talk about super microcomputers, that's exactly what we're talking about. We're talking about AI companies, artificial intelligence companies. So you can see that 75-day moving average that you helped me put on the screen here. But look at this move that NVIDIA has had over the last, let's see how many days this is. We can measure this out. Date range from, so this is 35 days. So over the course of 35 days, NVIDIA has gone up in value. Let's see here. It has gone up in value $228, and it has broke the $700 mark as we speak, as we're looking at this now. And beautifully enough, look at this. In the bear market that we had in 2022, NVIDIA hit a low of $107.03. Imagine if you would have been a buyer down here on NVIDIA and ran it all the way up to the $700 mark. That's $600 a share. But anyway, this is just historical, these moves that are occurring on NVIDIA. You're having days where there are candles that come in at moves of $27. Let's see what today's move is. We have $25. The day before, we moved $33. It's crazy. There are so many opportunities to trade these stocks. And to take it a step further, and I've talked about this stock on the show here, but super microcomputers. If you thought that those moves on NVIDIA were something, look at these candles here. I talked about that $115 move back right here just a few days ago. This thing moved $81. And then yesterday it moved $60. And today it's moved $37. Just insane, incredible moves. And when you look at the broader markets, like the SPX, the S&P 500, you can see that we're just grinding higher. We are so bullish right now. Now, eventually we're going to get a pullback because that's what happens. If you look at the Qs, which is the technology index, same thing. We're just smashing higher. But it's a fun time in the markets because things are incredibly bullish. Things are running to new all-time highs, and it's just fun. And I had to give a shout out to NVIDIA and to super microcomputers because they've been great for me in terms of trading these past 2 months. And hopefully if you're investing or trading, you're taking a look at some of these stocks and you're having some of the same benefits from them as well. So I hope this was an informative episode for you. You learned about moving averages. You learned about the importance of patience as a trader and investor. And you learned about two companies, super microcomputers and NVIDIA, who are really at the forefront of AI, artificial intelligence. And hopefully you'll check them out on that trading view that you've downloaded, right? And as always, if you're interested in learning more about trading, if you're looking to work with a coach, I do one-on-one coaching to help people learn how to invest and trade the markets. If you're looking to learn how to swing trade, I have a course coming up on February 26th. That's located in the show notes. Be sure to check that out. And that's going to do it for episode number 6. We are pushing along here with the weekly shows. I'll be back here for lucky number 7, episode number 7 next week. And I hope you have a phenomenal day. Please drop some questions down below. Share with your family and friends. Like, subscribe, and remember, courage always pays better than fear, especially when it comes to trading the markets. This is Jeremy Hritz signing off for the Traders Podcast, episode number 6, Courage Pays Better Than Fear. Take care, everyone.